Buying a home is a high-risk, high-reward investment, especially if you plan to buy that home with a traditional mortgage loan. And the reason I say this is because the current financial system is designed to sell you money in return for more money by adding interest. On top of that, when you take out a loan, not only will you have to pay more money in return, but you can also be penalized, which can lead to you paying more money. In addition to that, all of the risk of owning a home falls on the borrower, so whether it was a national disaster or foreclosure, you will still be responsible for paying that loan in full. What's up, thinkers? Chris Robinson here, reminding you guys to like the video to show your support for the channel. In previous videos, I went through the details of traditional mortgages and home buying. However, in this video, I would like to go through the details of Islamic home financing for those of us who are interested in buying a home the halal way. So in my previous video that you see here, I went through the details of Islamic financing. So for starters, if you would like to watch that video before getting into this video so that you can understand the terminology and the basics of Islamic banking that I'll be using in this video, I will link that video in the description box below. Okay, so now let's get into the details of how Islamic home financing work by giving you a comparison between an Islamic mortgage compared to a conventional mortgage. So we all know that at the heart of all traditional mortgage loans is the involvement of borrowing money with interest attached. However, Islam does not allow this as a permissible, aka halal business practice, making it illegal, aka haram, to take out a loan in this manner because interest is widely known as a term called riba in Islam. Also in Islam, when it comes to lending money, a loan is meant to be a charitable arrangement which should be a way for one person to help another who is experiencing hardship. This is seen as a noble act and it requires that the borrower only pay back what they borrowed and the lender only expect the exact amount that was lended out. In other words, a loan is not a way to earn money. It is also not accepted under Islamic commercial rules to buy and sell anything without any intrinsic value. And what I mean by this is that in traditional mortgages, the interest paid by the home buyer is not actually paid for the home itself. Instead, it is money that is paid to the lender to use for their own benefit. So when you agree to a traditional mortgage loan, it's like agreeing to buying $100 for $150. For example, imagine going to the store and you see $100 bills on the shelf, and when you go to the cashier to buy it, but when they ring you up for $150 in order for you to take home that product. And we all know that money has no intrinsic value. Well, it shouldn't, at least, because it is just merely a medium of exchange. And according to Sharia law, sales contracts must be backed by assets in Islamic finance. A traditional mortgage can allow home buyers to make what can be considered the biggest purchase of their lives. However, at the same time, it creates an uneven and unequal relationship between the buyer and the borrower. And the reason I say this is because the lender holds all of the power in this relationship. And the reason for this video is because very few people, including Muslims, understand that there is alternatives out there. And just so that you know, the Islamic approach to banking and financing allows businesses to make a profit while at the same time allowing consumers to have assistance with large purchases. However, it does place limits on business practices just so that it can protect valuable people. So when it comes to a loan, instead of having a lender/borrowing relationship, in Islam, home financing is seen as an investment that is shared between the borrower and the lender in terms of the profit and the loss. Islamic home financing is seen as a more ethical and equitable solution for anyone's financial needs. It's also important to note that it is not limited to just Muslims. In fact, it appeals to all people who are interested in a more transparent and ethical system of finance as well. And Islamic home financing is a more ideal solution for Muslims and non-Muslim families looking to buy a home in accordance with their values. All authenticated forms of Islamic home financing are free of riba, aka interest. The lender earns a profit in other ways, and the relationship is fundamentally different from traditional mortgages. So to give you an idea, there are 3 types of riba-free mortgages that is well known in the United States. Although I went over these 3 types in my previous Islamic finance video, I will still go through some details to give you a refresher just in case of those who didn't watch that video. So the first type is known as musharaka, which is a form of co-ownership between the home buyer and the financing company. This is when you and the lender agree to invest in a property and buy the home together. However, when the home buyer gradually buys out the lender's percentage of the ownership while paying a fee to use this part of the property, is called diminishing musharaka, which is also known as the declining balance method. The second type of interest-free mortgage is ijara, which is basically a lease-to-own arrangement. The financier purchases the property and the home buyer rents it. A portion of each payment goes towards the tenant's future ownership of the property. However, the home is not registered in the buyer's name until repayment is complete, which can be a downside to this type of mortgage because technically you cannot call yourself a home buyer until you complete the payments. The third type is known as murabaha, which is a model in which the lender buys the home and sells it to the buyer on a deferred basis at a agreed upon profit. The customer pays a deposit and repays the lender over a period of time, including the profit charged with each payment. However, I know some of you are probably thinking, hold on Chris, wouldn't this still be considered interest? Well, the answer will be no, because this is a resale with a deferred fee outside of the outstanding balance, whereas interest is a charge based on the outstanding balance. On the other hand though, this would be considered a downside to this type of mortgage because it creates an obligation for the buyer that resembles debt. So after learning these three interest-free mortgages, you're probably thinking that the no-brainer option would be musharaka, and the majority of the Islamic scholars within Islamic finance will also agree with you. Okay, so now that we know the details of the different types of Islamic mortgages, now let's walk you through the process of buying a home the Islamic way. Okay, so the first step is qualification or application process. This is when you start a pre-qualification to see what you could qualify for, then follow up with a pre-approval application. The second step is now the processing phase, in which a representative of the company you apply with will provide you with all of the details of your contract and ask you for any additional documents that may be needed to move forward. The third step is the underwriting phase, in which a underwriter will analyze your financial information, documents, and etc. to determine your eligibility. And the fourth and final step is the closing phase, in which the home purchase is finalized. Alright guys, so that is the halal way of buying a home. Keep in mind though, that this is not only restricted to Muslims. If you feel like this would be a good option for you, I suggest that you do some further research to find a lender that best fits your needs. Also, if you found this video interesting, don't be afraid to smash the like button, and also explore the channel for other videos related to this topic or other videos related to finance, credit, or business. I see you guys in the next video. Peace.